Oh, we have a big week ahead. Joining me now is Dan Deming of KKM Financial here for the Trader Rundown. Good to have you on the show as always, Dan.
Thanks, Angie. Thanks for having me.
We are going to see a lot of volume coming through. What's going on here, Dan?
It's interesting. Yeah, we've got a lot of news items this week. Certainly, we have some testimony from the Fed chairman Tuesday and Wednesday, and then the vote for the Brexit votes Thursday. So you can see that you're seeing a lot of options volume. Last week we saw some significant volume, the third largest trading day ever in the CBOE for option volume last week. So you see a lot of repositioning getting ahead of this vote. You know, some uncertainty as to the outcome, and that's leading to option participants really kind of hedging out some of their short positions and possibly looking for an outsized move here if something significant happens, and that would probably be that they leave the ECB.
Okay, so when the going gets tough, the tough go to defensive stocks. So what would be some sectors that you would maybe eye if people are looking to protect their portfolios, protect their retirement savings?
Right. Well, you've seen a flow certainly into the bond market. You've seen a lot of money flow into there when you look at the likes of a TLT and some of those areas, and as well as the utility sectors. Again, another defensive area has offered a defensive repositioning throughout the beginning of the first half of this year. And you continue to see that when you see these news items come out where there might be some uncertainty in the market, you see that the utility sector has certainly reacted positively, as well as the bond market.
The VIX is up, but are you surprised it's not beyond 20?
Well, no, actually, Angie, not right now. And really, it's a little bit of ahead of itself, but it's playing up to that uncertainty. Because when you look at what realized volatility, and this might be a little wonky, but at least the fact that what the market's actually moving on a day-to-day basis, the anticipation and the options is actually over-exaggerated. But it's, again, that uncertainty. It's kind of like looking at it offshore at a hurricane kind of coming in, and you see people grabbing wood and battening down the hatches, and that's why we saw this implied volatility really spike the last week and a half.
Do you think the market is sending off any signals about what could happen with this Brexit vote, or even Janet Yellen this week?
Well, I think that's going to be pretty significant as well leading in, because certainly they did mention that as one of the reasons why they opted not to move, that coupled with the fact that the unemployment situation came in much lower than expected. So I think that those things are certainly going to play into the mindsets of traders this week. And, again, the uncertainty and the horrible, tragic thing that happened last week, with the Brexit situation, and now the campaign's been reined in. So that, again, at first it felt like it was going to move it maybe towards that they'll stay, but now the market's digesting that, and I think the uncertainty is still going to continue to ramp up as we close in on that vote, particularly if it looks like it's a 50-50 shot right now.
Many question marks.
Many, yeah. And we'll get some answers, I think, in a week, and the market's going to react probably significantly one way or the other, and that's why I think, again, another reason why you're seeing implied volatility jumping higher.
Have a good week, Dan.
Thanks, Angie. Thanks for having me.